Hi everyone, welcome today to episode 2 of this BrightTALK series. So this is the Ask the Expert series and we're talking about cryptocurrencies. And our speaker for today is David Siegel. So David, do you want to just pop in and say hi?
Sure. Hi. Hi everyone. Can you see me?
Yep, all good David, thank you. So thanks again everyone. Yes,
I'm in London at the Rise Accelerator podcast room.
Perfect. So thanks so much, to David for joining us. David's obviously a huge name in the industry. So for the format for this session, as you know, this is part of a BrightTALK series. You'll find in the attachment section a bunch of other links to other episodes in the series. We've got machine learning, blockchain, we did ITSM, so check those out and sign up to those too. For this session, we would love to have your questions to David. So I've got a few up my sleeve. And just to give you a bit of a background as to who I am, this is Ina Yulo, and I'm the Senior Content Manager and Team Lead here at BrightTALK. My background is very much in the marketing world. I launched BrightTALK's FinTech community as well, and we grew it from scratch to now over 300,000 global members. I'm on the Women in FinTech Power List, and I'm also a mentor at the Factory in Oslo, Supercharger in Kuala Lumpur, and the European Women in Payments Network, which has its annual conference in Amsterdam again this year. I'm also a regular speaker and moderator at events, and I would love for you to get in touch with me if you'd like to take part. Tweet me via @InaYulo, and also get involved with the conversation. Tell us how you like this format via the hashtag #AskTheExpert. Other ways to get involved, our Twitter handles are all up there. Make sure you're tweeting us, tagging us in your posts. And again, this session is really for you to get all of those questions you have on cryptocurrencies answered by David. There are a few questions already that have been sent in, but please continue to do that. So, we will really make sure that this session is about the questions you want answered. Again, check out the attachment section and send us feedback. Now to our speaker. So David, if you could just pop back in and introduce yourself and the work you're doing, please.
Sure. Hi. Here I am. So welcome to everyone. Thank you. I'm probably a few regulars out there and new people. I educate people about cryptocurrencies and tokens and tokenomics. And I'm part of it because I'm CEO of the Pillar Project here in London, where we are building the world's most advanced wallet to hold your cryptocurrencies and tokens.
And David, you're the author of the Token Handbook as well, aren't you?
Yeah, I'm the author of a lot of things. I've written a bunch of books, and last year after our ICO for the Pillar Project, I wrote the Token Handbook to help educate people on what tokens are, how tokenomics work, and how you can have your own ICO. So a lot of people who do ICOs, I would say almost 100% of ICOs these days are using the Token Handbook as a reference.
Great to hear. So really happy to have you on board, David. So could you also just give us a brief, introduction? There might be a lot of people out there, I think, joining us who have heard about cryptocurrencies, see it in the news, but could you just give them the lowdown on what they are? And I'm sure Bitcoin is one of the ones that obviously stands out to a lot of people.
Sure, without explaining too much about blockchain, but a blockchain is a ledger that everyone shares and everyone trusts to be accurate and secure forever. So we won't go into those details. It's a shared ledger. That's the important thing. And with a shared ledger and a few more tricks, you can actually do pretty much everything a bank does. But one of the things you can do is issue currency. So there is usually one cryptocurrency per blockchain, and right now there are hundreds of different cryptocurrencies that are the unit of the exchange and unit of value inside each of those different blockchains. And the biggest one, the first one, was Bitcoin, which now has, I don't know, about $300 billion market cap, I think. Something in there, and the second one that is kind of second most popular is called Ether, and Ether adds more functionality. You can program, you can write what are called smart contracts and program that currency. So we call that programmable money. And there are many more, hundreds and hundreds of names of currencies, And then we have what are called tokens. And tokens are usually created with the Ethereum blockchain. It's a single purpose thing typically that you can create yourself. You can make your own tokens. There's a standard, and it's fairly easy for a programmer to do. And there's a fixed number. So, for example, for the Pillar project, we have 800 million tokens will ever exist, and we got about 240 million in circulation right now. It's kind of really a money supply, and these tokens allow you to do different things. So, in some cases, you have like a commodity token that would give you the ownership of some commodity, like say a gram of gold, or a ton of oil, or a diamond or something. And then others give you access to the system, like the key, like the password, like when you have a software subscription, you'd sign up with your credit card to pay for a software subscription. Well, instead of that, you could just pay in tokens. And then when you're out, you go to the exchange and buy more. And so these tokens are kind of like tickets to get you into systems. And that's mostly what we have. We call them utility tokens. But there are also security tokens that represent like a hedge fund or a venture fund. And later this year, we'll be doing a lot more with equity tokens, where you can buy a token that represents the shares or the equity of, say, a startup or a private company. So there's a pretty wide range of things that tokens and cryptocurrencies can do. And there are thousands and thousands of them. And you can learn. It takes a bit of a steep learning curve, but you spend time on YouTube and around. There's a lot of webinars here on how to do it, and you can build yourself a little portfolio of currencies and tokens.
Thanks so much for that, David. I always like how you're able to put into words some really complex topics, and I think that's why people also like tuning in. So just right off the bat, like I said, I have a few questions for you prepared, but there are some questions already from the audience. They're piling up, and I think some are actually, quite starting at the beginning, which would be good for us. So this person is asking,
Sure.
What is a token?
A token is a unit of specific value inside of a specific system. It typically has a specific function. So the token would give you access to a system. So just imagine something like LinkedIn, or what's another one where you have to pay a subscription fee? There's tons of them. Dropbox. There's any number of services where you pay a subscription fee. Well, you wouldn't pay the subscription fee. It's like a coin. It's like a token for the subway. You would use that digital token as an access token to get the use of that system, and you wouldn't have an account. You wouldn't have your credit card. As long as you use tokens, you're fully paid up. So it's also like when you get on an airplane or a train and you just use a QR code to get on. That's a token. That right there, that's an access token. You've bought it, and now you use the token in the system to give you access. So that's a good example of what many of today's tokens are. They're access tokens. But of course, token can also signify ownership of something. And there are other things. For example, if you loan someone money, you may get a token that then pays you some kind of a monthly coupon. And the token would do that. So there are different things that tokens can do.
That's a really good point, actually, David. I think that the reason why we're hearing a lot about tokens and tokenization is because of the cryptocurrencies. But it's good to remind people that we've been using tokens for quite some time now. We maybe just didn't call them actual tokens, like the QR code you mentioned.
Oh, please, everybody, take out your wallet and take out everything in your wallet. All those things are tokens. You got currencies in there and tokens. Anything with a barcode, anything with a QR code with a special number that gives you your gym card, for example, your driver's license, all these are tokens. Driver's license is an access token to be able to drive your car legally, and if you don't have that, you're not supposed to be able to drive your car.
Definitely. And David, let me know if you wanted to go back to webcam, so go ahead and just switch back whenever you'd like. Another question from the audience is, what is an ICO?
Sure, I'll go back to the webcam. Let's see how the lighting is here. So, cool, what's an ICO? An ICO is a token issuance event. It's actually, the best way to think of an ICO is like a Kickstarter campaign. Some people want to build a project, And instead of selling the product ahead of time, as you would with Kickstarter, and then you get the money and then you get to go build the product, I think most people understand the Kickstarter model. In the ICO model, you tell everyone what you're going to do. Usually there's a white paper and there's usually videos and plenty of promotional material. Then for some period of time, the ICO is open, let's say for 4 weeks. And when it closes, all the people who've given money to your smart contract that accepts the money, well, then they will get tokens in their wallets and you'll have the money. In most cases, it's called Ether. It's a cryptocurrency called Ether. And then the project has financing and you go build your product, and these people now have tickets that can be used in the system. Of course, some people overbuy these tokens because they figure they'll make money on them later when the price goes up, and they'll sell them to other people later. But some people are just natural buyers, and they're really excited about this system. For example, our Pillar wallet. The Pillar wallet will be free to use, but to do transactions in the wallet, you'll need a few pillars to power each transaction. And a bunch of people have those Pillar tokens because they're looking forward to using their wallet. They're the natural users, and they've given us their money ahead of time so we can build the system. And then when we're open for business, they'll use those tokens.
Perfect. So I think what we're going to do now as well is we're going to flip back to some of the questions I have. So one that I have actually is, it's a forward-looking question. How do you think the token landscape will change this year?
A lot. Without going into too much detail, I think we're going to see a lot of security tokens or equity tokens that either they'll have to be registered as securities, or they'll only be available in most countries to high net worth individuals because they'll have to be done with private placement offerings that are only available to high net worth people. It's really too bad, but it's the way things are going. More and more, regulatory organizations and governments are saying, hey, tokens look and smell like investments, and so we're going to regulate them like investments. And I can't say exactly how it will come out, but certainly the SEC and the regulators in Europe have said we're taking this on a case-by-case basis, and if people are buying them mostly to make money as they appreciate in value, that sounds like a security to me, and they'll start to regulate them as securities. We don't have a final word on that. It's kind of there's a lot of regulatory uncertainty, and different jurisdictions have different rules. But that's one big shift we're going to see. Right now, ICOs are different than they were 6 months ago. Right now, you have to do KYC on all the people who are going to invest. That's know your customer, so you're going to have to give them a copy of it, like a driver's license or a passport, and register to be able, so they know who you are and where you live. That's critical now. And probably no Americans are going to be allowed to buy any tokens this year because it's just too risky, too much risk with the SEC. Although it would be great if we kind of got more clear guidelines and knew exactly what we could sell and what we couldn't. The gray area is in this area of what we call utility tokens, and there's two parts to it. One is people give you money to build your system, but it doesn't exist yet. So it's a dream, it's a white paper. Maybe there's a prototype, maybe there isn't. And while it's being built, regulators have said that's very risky and it could fail. So that sounds like a security, like a startup. Sounds like the stock of the startup more so. So those tokens will have to be sold only to sophisticated investors. But then when the system is open for business and it's really more or less just a ticket and a unit of value in the system, well, then it's just a utility. So then you could convert it or issue separate tokens then that would be for the natural users of the system. This is a pretty gray area. There are many examples all along this spectrum that are pretty hard to pin down. So the uncertainty is still a big part of our market. And what will happen in China this year? What will happen, for example, with a big one coming up called Telegram. They're going to have what they believe will be a $2 billion ICO for a single company. Will that be open source? Will it be more like stock than not? They've claim they've already sold $850 million worth of tokens. So probably going to be some big ones this year, and probably a lot of them will be only available to accredited private investors. And probably the ones that are issuing these utility tokens to the public will be avoiding probably several of the big regulated markets. Too bad, because there's tons of innovation going on, especially in open source right now. And it'd just be really great if people with an open source dream would be able to raise a little money and build their cool project and have it be open source and let the utility token fund it. But we don't know if that model will survive this year.
So David, you touched a lot on the different regions and what they're saying with regards to cryptocurrencies. So one of the things I wanted to talk about, since we also touched on regulations, you've been writing a lot when it comes to regulations, and California is in the news right now, top news, that they are considering a Bitcoin carbon tax. So how do you see regulators responding to what's going on?
Look, regulators are struggling, right? They're in the middle of a Cambrian explosion of innovation. Just last week, somebody, government or regulators in Wyoming, said that they don't believe these tokens are securities, and come on over to Wyoming and have your token sale. Now, the problem with that is, I guess, if you sell to some people in Wyoming, maybe you're okay, but if you sell to people in Idaho, maybe you're not okay. So pretty tricky. I don't really think that carbon taxes work at all. So I think they're nice for politicians and companies that sell them, but I don't think they help the environment one bit. So I'm not sure. Everyone knows that the tremendous amount of energy being used, and it's not, I wouldn't overstate it, but it's significant to run these blockchains, and to really make the blockchains secure is going to change. And certainly the Ethereum blockchain is slated to go to what's called proof of stake and get out of the energy consumption business by the end of this year, that we hope. And I predict that Bitcoin will have to switch to a proof of stake or some other model that doesn't use up as much energy. Not this year, but over the next, say, maybe 2 or 3 years.
Okay, thanks for that. And also, so thank you to someone who sent in. They said, not a question, just a comment. Yay, I'm so stoked for this. To hear people speaking my language is awesome. So thank you for sending that in. We're happy that you like the format and that you're happy with what you've heard so far. A lot more to come. We're getting tons of questions in. So I think I'm done with my questions. And as I mentioned, your audience questions are piling in. So I think, David, we should just, stick to those ones. Some good ones here. So Lamine, I hope I'm pronouncing your name properly. Lamine is asking, what do people use cryptocurrency mostly for?
Right. So recently, some people, who was it? Said that was it the Fed? No, somebody said that the cryptocurrencies and Bitcoin have failed as a currency, and that hasn't worked. Sorry, I forget who just said that, but and Warren Buffett has said this isn't going to go well, but they don't understand it. It's not really money. So maybe someday it will be money. And without going into too many details right now, Bitcoin is really nothing but a store of value. You have something called Gresham's Law, which says that bad money drives out good. It means that people will hold the good money and spend the bad money. And that's what we're all doing. We're holding our Bitcoin and not spending it. We spend dollars because we think that Bitcoin is a better currency someday. It's not a currency right now. So it's a store of value. You would buy a Bitcoin, for example, to hang on to for 10 years, to give to your children, to not sell and not mess around with and not trade. And that's probably going to work out pretty well. It certainly has worked out well in the last, 9 years. And I expect that, compared to other stores of value, people consider gold to be a store of value, for example. I think Bitcoin will do very well. So now is still a good time to buy many cryptocurrencies if you're a holder, a long-term holder. They're really not for buying T-shirts or lunch or shopping at Amazon, because first of all, you get taxed on every transaction just as if you had bought and sold a stock. So you've got to report every single transaction and the gain and loss from it. You don't have to do that with currency. And second, because it's going up so well, you wouldn't really dream of it. It wouldn't make sense. You'd rather just get rid of your dollars or your pounds, or your euros for that. So we're not seeing it as a unit of exchange. And then the other thing that would take to be money would be called a unit of account, where, for example, I do a bit of consulting and I charge, in Bitcoin. And I'm sometimes paid to give a talk in Bitcoin. And that's very rare. Almost no one would price anything in Bitcoin because the price goes up and down so much. So it doesn't qualify as a currency. It's mostly a store of value. Now, on the Ethereum blockchain, the Ether, I think that's also an excellent store of value. And we also use it for this, what we call the programmable money of smart contracts. So that gets a little more trading hands because it's got value for example, picking up an insurance policy on a smart contract, or for use inside some of these systems that we described for tokens.
And in line with that, David, so this person asks a very practical question, especially for those just starting out. How do you buy a token? Can you use any available normal currency, so I guess they mean a fiat currency, that is globally traded in Forex markets to buy a token? Really good question.
Yeah, you're going to need to go through an exchange that is licensed, because only a licensed exchange in the U.S. and Europe is going to be able to handle your money, your fiat money. That's why we have many exchanges online that don't touch fiat money. First, you go to an exchange like Kraken, like Coinbase, and you get your first little account. You go through all the steps it takes to sign up. They have videos, they have tutorials. It takes quite a bit. It takes weeks and weeks to kind of build up your status as a member there, because you've got to keep giving them more information and go up at different levels. Then you'd wire them money, or you use a credit card, I think, to send them money, and then that will show up as sort of synthetic dollars in your account. Then you can trade those dollars for things like Bitcoin and Ether, and then that's kind of step one. Then once you have that, you would send that Ether off to another exchange to buy other tokens or different kinds of cryptocurrencies. You go through a big exchange that has the licenses to change your fiat currency, and then you send the Ether off to a different exchange to buy the various different things that we have, in our sort of cryptocurrency and token world. And then when you buy a token, you're going to be sending your cryptocurrency, like typically Ether, to a smart contract, and you'll be following the instructions of whoever's offering you the ICO, the token offering. They'll tell you what to do and what to expect.
Great, thank you. And so someone is also asking fiat exchange, that's spelled correctly. So yes, I can actually answer that one. It is spelled correctly. That is FIAT. Next question is, so we're going to go into ICO territory again. So this person is asking a situational question, when I think could probably relate to you as well, because he even cited Switzerland, where I know you used to live, David. This person is asking, if I wanted to do an ICO for a not-for-profit company, probably in Switzerland, to help migrants, will I be able to use your company or wallet? Again, this is from Lamine.
Sure. ICOs are very risky right now. There's a lot of phishing and hacking going on, and I would say they're very unsafe. They're not a little unsafe. They're very unsafe. And that's because the wallets are very unsafe. The wallets work if you use them well, but it's easy to get phished and hacked. So I wouldn't recommend it right now. Last year we had probably $400 million of phishing and hacking on ICOs was stolen by bad guys. And it's not that difficult. You have to take a lot of precautions, and still it's, if you don't really know what you're doing, it's not that hard to send your money to an ICO only to find out that you've messed up and your money's gone. That's unfortunately probably at least 10% of people experience that. So I would maybe wait, and we've got a wallet coming out called the ICO wallet that will be out, we hope, this summer. We don't have a date on it. And then you'll just move your Ether into the wallet, and then you'll be able to buy and sell, buy into an ICO safely, and then we'll list the token right away, and then you'll be able to trade it. It never leaves the wallet. The wallet is a very safe environment. That's what we're building for consumers. And if you're you want to do it in today's Wild West environment, get help, get someone who really can spend some time with you to make sure you're taking all the proper precautions.
So David, actually, I'm glad we're on this topic because someone's also asking. So this person is thankfully aware of the threats that an ICO could have and that it could potentially be a scam. So this person's asking, how or what are some red flags to determine whether an ICO is a scam?
Good question. Great question. So first of all, I have just talked a bit about the mechanics of buying an ICO. For example, you could get phished. Phishing means you go to like My Ether wallet, but you don't spell it right, or you click on a link and it takes you to something that looks exactly like My Ether wallet, but it isn't. You send your money there and it's gone. The bad guys got your money. So they are pretending to be a wallet that they aren't. And now, of course, there are plenty of groups pretending to have legitimate ICOs. I've even heard of white papers just being copied and the names and logos being changed. So you see, well, these guys have a 38-page white paper. That looks pretty serious, but in fact, they just ripped it off from somebody and ripped off the whole website. So be careful. Do a lot of homework. Get in a group of people and find out what you can. There are probably 150 different ways you could get scammed on an ICO. You know, one of them is multi-level marketing, right? We're doing this token. And the more tokens you sell to other people, the more tokens you get. Okay, so that sounds like a pyramid scheme, and it is. And that's something I wouldn't want to touch. There are many other such things, and they're all kind of pretty similar to the scams you might hear about every day in the con games that take place outside the crypto world. Many of those same devices and same mechanisms are used. Boy, you're going to have to do your homework. So my best protection is realize that risk is not so bad. What kills you is exposure. So if you get all excited about a project, even mine, and you put too much, you go over your skis so that if that project failed, you'd be in trouble. You're overcommitted, and that's a bad decision. So no matter how much you like a project, I think you should dial it down, accept the risk. For example, if you build a portfolio and you really get serious about this and you get 20 tokens in 20 ICOs, and you can also buy these in the secondary market as they're being traded. You could take, last December's ICO and go pick up the tokens now. And you build yourself a portfolio of these of 20, and let's say 10 of them do turn out for whatever reason to either be a scam or it just didn't work. A lot of projects don't work. It fails. Let's say 10, 12, 15 of them fail. Well, you still have 4 or 5 of them, and 2 or 3 of those might turn out really well and make up for the whole thing. So I believe in diversity. I honestly believe that if you have 40 tokens in your portfolio that you believe are not scams, you're probably going to do pretty well. You're probably not going to lose your money if you have 40 in your portfolio.
Again, I think another point that, really good point that you made, David, is a lot of the time I think from what I've seen, people take the cryptocurrency market to be something so different and new to anything out there. But it's the same thing. In more traditional investing, you also have to diversify your portfolio. You would never put all your eggs in one basket. So it's funny to see that people are sort of doing that when it comes to crypto, that you hear about people who have, put their entire house and life onto just Bitcoin, and then when Bitcoin crashed, now they don't know what to do.
Well, it's unfortunate, Ina, because the story is that so-and-so sold his house 3 years ago, bought Bitcoin, and, he bought it at 300, and now it's at 10,000. And so if it goes down to 7,000, this person is not in bad shape. The problem is this person made a very bad decision because this person invested more than he or she could lose. And when there's that much risk, that's a bad decision. So it sounds good. It sounds like, oh, this person's really smart. Actually, that person's really dumb and just got lucky because there's no way to know that Bitcoin, when you bought it at 300, there's no way to know it would have gone to 10,000, 15,000, 5,000. There's just no way. So don't pretend you can tell the future. Don't try to outsmart the market. Just buy as much as you can lose and try, I keep saying, take 10%. 10% of the money you would want to invest in anything, all your investable money, and put it into a fairly diversified portfolio of both cryptocurrencies, many of the like the top 10 major ones, and a bunch of tokens that you think are promising and maybe undervalued. That's fine, so that your portfolio has maybe 30 or 40 different things. And I would recommend flat weighting. That means if you're going to go for 40, you divide it by 40. 1/40th of the money goes into each one of them. Don't play favorites and say, well, I'm just going to load up on Bitcoin. Actually, we've done a lot of testing on this, and it turns out that broadly diversified portfolio of small, unheard of coins no one knows anything about actually beats the top 10 in performance and much less volatility. So spread it out, and don't take more risk than about 10%. But with that 10%, get at least 20 and preferably 40 different cryptocurrencies and tokens.
Thanks, David. And so I want to go to this one question right now because this person is in a rush. So we have an audience member who is saying, gotta go right now. We'll listen to recording later. But is the secondary market safer than the ICO market itself?
It could be, for gosh sakes. People are really getting fished on these ICOs, and there's a lot of uncertainty around them. So on the one hand, you might be able to get in on the ground floor. On the other hand, it's kind of like IPOs, right? It's not unusual for people to be selling tokens after an event like that, and then you pick them up at even less than people bought. And remember, a lot of ICOs will reward the marketing team with tokens and the various contractors that they use for promoting the ICO, and those people are selling. Those people are not going to be hanging on for dear life. They're not going to be holding on for value. They're going to be selling. So if you could actually do pretty well looking for tokens at the same price or even lower than they came out at. But of course, it takes patience and quite a bit of attention to do that.
Okay, thank you. And just to remind the audience, we have a queue of questions, but please continue sending them in. We're going to try to get to as many as possible. Also, check out the attachment section. Lots of good stuff there.
So, Ina, yes. Do you have the sense that most of these people asking questions are investors, or are they interested in having their own ICOs? What do you think?
From what I can see, I think that they look like investors. So I think that they are investors who are seeing the ICOs and because they hear the security questions and the scams that are all over the news, they're wary, which is good, that there's actually that bit of caution now, and I think they're here, honestly, to do more research, to see if they can be smarter about their investments, and to get an idea from someone like you who had a successful ICO to, again, the red flags. I think that was a really good question.
So I've got, there's a website called BrightTALK.com. Have you heard of it?
Let's hope so.
And if you look for my name there, you'll see that I've got a full webinar on crypto investing and another one on postmodern portfolio theory that I recommend to everyone. And at 2030, my other company, we're working on a single token that represents a broad basket, an index of more than 50 cryptocurrencies. And that will be available later this year. Unfortunately, only to wealthy people because of the laws. We would not be able to sell that to the public. That's definitely a security.
And just so you know as well, David's blockchain webinars on BrightTALK, there is a link in the attachment section to all of that blockchain content, are some of the top webinars in the entire BrightTALK. And not just that, but the ones he mentioned, the crypto investing webinar, and also the one on postmodern postmodern portfolio theory, those are two of the top ones also. I know because I checked this yesterday in our investment management community. So there you go, David.
Wow. Great.
Okay, so more questions coming through. So another one, a little bit on security, I guess. This person is asking, how do we ensure that the exchange or portal that I use to buy crypto, e.g. Bitcoin or Ripple, actually buys it on my secure ID or e-wallet?
The regulated exchanges like Kraken, like Gemini in the United States, these are pretty secure exchanges, although exchanges do get hacked, and the more money they hold, the more they're a huge target for hackers. Then there are what we call decentralized exchanges, which are cool, but kind of just getting started, really. They're also have their own dangers. But the cool thing about a decentralized exchange is you hold the private keys to all of the currencies or assets you buy, and therefore the exchange can't be hacked. So I think it's important to realize that exchanges do get hacked, and those of us who are professionals, and I strongly recommend this, buying and holding works better than trading. So you put your money or your Ether or Bitcoin onto an exchange, you buy the tokens that are there or the currencies, and then you send them to cold storage. And what is cold storage? It's a way to store your assets are on the blockchains, but your private keys are off the internet, and so no one can find them. And there's lots to learn about cold storage, probably right here on BrightTALK and also on YouTube. And so you'd put them on exchange, you'd buy, or you'd maybe participate in an ICO, and then you got your tokens and you'd get them off. You'd store them more safely than you would by leaving them on an exchange.
Okay, thank you. So here's an interesting one, and I am very curious to know the answer to this. This audience member is asking, any crypto you would suggest, or which cryptos are in your portfolio, David?
Yeah, if I mention one that I like, I can tell you social media channels would just light up with David Siegel says this token or that token.
It'd be a trending topic, a trending hashtag.
I am not going there. That's way too dangerous for me. I do happen to like the Pillar token, but I'm a little biased. I've got enough of those. I do like a lot of the cryptocurrency. Look, I think don't pick your favorites. Figure out which ones you think are not scams and buy a broad portfolio. Be really proud of yourself if you can get 50 tokens fairly evenly distributed, even for projects you don't know anything about. That's not too bad.
Great, and we have another, so this is a comment from the audience, but thank you again still for sending these in. We really love the feedback. This person is saying, I'm a regulatory-related employee at a financial institution, joining this webinar to understand more about cryptocurrencies to help with fraud identification and mitigation. Appreciate the basic discussion points as I have very little knowledge of the subject. Thank you so much for that. Again, this is the whole point of this Ask the Expert series, is for people who are maybe just starting out or would like to have more basic knowledge on a topic that can be very complicated to get those questions answered by our experts. So
one quick thing, I recently wrote a big article called An Open Letter to the SEC about regulation, and you can find that on medium.com under my name. I'm actually just look for An Open Letter to the SEC or type in my name, yeah.
Perfect. Thank you, David. Actually, one of the other ones that we have here is asking, what would be the FDIC equivalent in these crypto token issuers?
FDIC is banks. So there's no equivalent. We are not the banking system, and we don't look or smell like the banking system, and there are very few equivalents. So crypto is its own world, and a smart contract is what issues the tokens, and the terms of the smart contract, and it's just a piece of software, say exactly how the tokens are issued, who can buy them, and what you can do with them. And in fact, it's very, very important when you're doing your due diligence to see that smart contracts have been audited by an independent firm. We had a very good auditor for our smart contracts, and thank goodness we did, because these guys will catch a lot of little things. You can have very good software programmers write a good, the language is called Solidity for most of them. You can have really good guys, they write it, and then you bring in the auditors, and they find little vulnerabilities and little tricks that are going to trip you up. So check whether something is, the smart contracts have been audited, and read the audit. The audit will tell you whether there are red, yellow, or green flags on that smart contract. And it's important because a lot of people are rushing and getting their smart contracts done in a hurry. And if the audit is quick or the audit shows red flags, but they ship it anyway, don't buy that ICO, because the issuer is the smart contract. It's all done in software.
So David, two questions focusing on Pillar in a row. I don't know if it's the hat or just the really engaging discussion. So first one is, how will Pillar's ICO wallet work? But then I'd like to just kind of pull in the second question as well that said, you mentioned the Pillar wallet, and then you mentioned a new ICO wallet you are working on. Can you differentiate between the two? Or what's Pillar? Why would I use Pillar?
The first wallet we're shipping in the next couple of months is called the token wallet. So you'll be able to move your Ether and your tokens in, and there will be ways to buy and sell tokens in Ether in the wallet. Then after that, we're moving on to Wallet 1.1, which lets you do KYC and identify yourself, and lets you do some storage so you can back up your data, because everything in the wallet is yours. I don't have it. It's not. There's no central server. It's not Facebook. It's your wallet with your data, so you're going to want to back it up well. And then sometime in the summer, and I can't say when, I'd love to be able to say when, but I simply can't, we will release the ICO wallet, which will have a back end where people doing ICOs can apply to put their ICOs in our wallet, and we'll accept them or reject them depending on our criteria. Obviously, we're going to be pretty rigorous about how we do it and who can buy it. And then the ICOs, then, if you've done KYC in our wallet, that means you've shown your passport and gone through an identification process, you will then see the ICOs that you can buy. And the cool thing in our wallet is you won't see any addresses, any of these alphanumeric addresses at all. You'll just see the name of the project. Everything in our wallet is a card. So you'll go to the card for that project. You'll see the price. You'll see the terms and conditions and the timeline. And then you can just, when it's time, when the light goes green, you say how much you want to buy. And then it'll say, great, your money's been accepted, your tokens are pending. When the sale is over, you'll receive the tokens in your wallet, and then you'll be able to use the tokens in your wallet. And this is a much safer environment. You'll be able to trade them in your wallet. You won't have to take them anywhere outside your wallet. We want to even make it so that you use your wallet to log into those projects, and everything's done within the wallet. You won't have to send them anywhere. This will take time. So I'm hoping by the end of the year, we have a pretty robust ecosystem for buying, trading, and using tokens.
Cool. Thank you. Something to look forward to for sure. And you touched on KYC, or Know Your Customer. We have a question from the audience that is asking, can you please elaborate on the KYC and AML or anti-money laundering requirements and or any others that protect from funding illegal activities?
Oh, I don't know how many people are interested in this, but there's a lot of old world mechanics around anti-money laundering and checking, and it's the stuff that banks have to do, and now we have to do it too. Do I like it? No. Do I think it makes sense? No, I don't think it makes sense. I think if you take an evidence point of view, you're going to see that there's a lot less money laundering and drug trafficking and things on the blockchain than off. If you want to do money laundering, the best thing is cash. Cash is your best tool for that. Blockchains and cryptocurrencies are not particularly suited for that, so most of those people don't use them. Of course, there's some everywhere all the time. And so there's a bunch of regulations to comply with, and it's not really worth going into the details. But to buy an ICO now, to participate in an ICO, you do have to go through KYC, which is, and sometimes it's done with a photo, sometimes it's done with a video. You're going to have to provide a document like your passport. And usually you have to also provide proof of address, although they're getting better at just looking that up in databases now too. So if they have your social security number, for example, most of the time they can find your address. And then the next level would be called accredited investor. If you have a net worth of so much, it depends on where you live, then you're green lighted for being able to do the sophisticated investor investments that would be like for equities, for startup stock. And that's why, unfortunately, the public can't buy startup stock. But if you have the accredited investor check on our wallet, then you'll see the various equity tokens that you would be able to buy there that the public can't by law. I think most of it doesn't really protect investors much at all. But that's just my opinion.
Okay, thank you. Another question. Are there any exchanges by which we can buy crypto using US dollars? Most I have seen need Bitcoin or Ethereum or Litecoin to buy other coins or tokens.
Yeah, I answered that question. There are regulated exchanges, Coinbase, Kraken, Gemini. There are several others that you can wire them money, and they'll give you dollars in your account, and then you can change those to various cryptocurrencies right there in those exchanges. Sure.
Okay. Thanks. And another one on the Coinbase front. How does a customer actually receive the tokens back to Coinbase if they are participating in an ICO?
Yeah, Coinbase can't handle tokens. So Coinbase is kind of step one. It's where you put your money so that you can get your Ether, and then you'd send your Ether either to a wallet for like ours for participating in an ICO, or you could send it to another exchange and just buy those tokens where they're being traded. You could send your Ether, for example, to Bitfinex, and Bitfinex has quite a few tokens, so you could just buy tokens on the exchange right there. If you want to participate in an ICO, you're going to send it to a wallet and do it from a wallet.
Next one. Oh, so what and how do you think they are going to regulate cryptocurrencies in America?
I'm pretty sure I already answered that.
Oh, sorry about that. Next one is, can you discuss the differences between the two value pools, equity and token, and how the new token offerings affect equity values? Ooh.
That's a kind of a bit of a complicated question that wasn't asked in a way that I can easily answer. Tokens and equity are not different. They're apples and oranges. So equity means stock, and private stock is not available to the public and can only be sold to rich people. And tokens are a whole spectrum of things, from a bus ticket to an access token to you could even think of Ether as a token because it's used for various special purposes in the system. So token has a very broad range of meanings, and we will see equity tokens this year. We're working on an equity token platform, so that wealthy people can buy equity tokens. You know what I hope, Ina? I hope we can show regulators that equity tokens are not so bad for the public, and they should relax the restrictions for equities and let the public buy startup stock. Whether it's through, you can do it through crowdfunding today anyway, right?
Sure.
Crowdfunding lets you buy startup stock, but not that much. There are limits. And tokens would give you more limits, higher limits, and then I think it's just not as risky as they think. Now, in the United States, crowdfunding limits are slated to go up to 5 million. I can tell you that is a game changer. When one company can raise 5 million in a crowdfund, that replaces most of the angels and venture capitalists in many cases. So that will change a lot, and of course we'll be able to tokenize that and make those tradable. That, I think, is all in the next 2 to 5 years of advancement in the United States and in other places. Tokenizing equity or startup stock and then letting the public trade it, that's certainly something we're working on. And we have to do it within the confines of current regulation.
That sounds like a potential really good webinar panel we could do with you and other people to help convince the regulators. If you have any, I know you have lots of friends in the industry, so if we could get those people together and kind of push that movement forward, that would be very interesting.
They're going to want to see us make progress, people not get too ripped off, people, safe experience, and it'll take time, but I hope we are able to make a good case for tokenizing and trading things that are right now considered securities.
So another question on the risk of money laundering. Someone's asking about the Silk Road. Money is laundered in many more forms than just cash.
Cash is by far the king in money laundering. It's got to be 90% of the market. The ideal tool for money launderers is the $100 bill. That is the product used worldwide by money launderers and terrorist financiers. Almost nothing comes close to that. There's a tiny and insignificant amount of money laundering and terrorist financing going on in cryptocurrencies. It's not worth worrying about. There's $3,000 of cash, of bills, for every man, woman, and child in the United States. That's about $3 trillion of cash circulating in the world, 90% of which we don't see, 80% of which we don't see because money laundering, people are using it for money laundering.
So here's another interesting one. So it says around 50%.
I'm sorry, I have to correct myself. I think it's around $2 trillion worth of cash. Sorry.
No problem. So this person is asking, around 50% of people around the world don't have internet access. Potentially more than 50%, I think. But they're asking, how does Bitcoin propose to break this issue?
What percentage of people have in the world have Bitcoin, have internet access? Percentage of people in the world with internet access, because I think it's well more than 50%.
I was thinking the exact same thing.
According to Wikipedia, it's 51%.
Oh, wow. I honestly thought it was way more than that.
As of 2015. It's now 2018, so it's certainly more than 51%. It could easily be 60%. You know what? There's a tremendous amount of value in using the internet for everything, for content, for commerce, for social, for all these reasons, and it's coming. I think that cryptocurrency is just another reason to make sure that everybody gets internet access. In my last book in 2010, I said if you want to help people in poor countries, the number one thing you can do is help them get access to the internet. There are charities working on this. Facebook actually works on this. Of course, Facebook has an ulterior motive. Our goal is to let people manage their own data, and so that large companies don't. But yeah, we need more billions of people with access to the internet, and it's definitely coming. I mean, when I'm in Africa, everybody has a phone in Africa, and probably and more than half of the people in Africa have access to the internet. It's just that they don't have broadband, so they have to use it in clever ways because they don't have it, full. They can't watch a baseball game on it, but they can still get crop insurance, via the internet or via SMS. And so it's not just, SMS is also pretty powerful. So look, we're really changing the world here, and the world is rapidly getting more connected. That changes a lot of things. So connectivity is kind of a really once in a lifetime transition we're making right now. It's happening in your lifetimes and forever after. I remember I was part of the development of the World Wide Web, and we all looked at each other at some of these conferences and said, it's never going back. I mean, this is forever. People will be connected, and that just continues to accelerate. In another 30 years or so, we'll be done. Everybody will be connected, and we'll have many kinds of options for economy, for money, for store of value, exchange of value, content, community. Everything will be much cheaper, much faster, much better, much safer, and more decentralized. That's why I want people to learn more about blockchain itself than I do want them to spend their time studying ICOs. Honestly, I think blockchain is a game changer. I think you could quit your job today, start a blockchain company, and have a reasonable chance of doing very well, because now it's early days. Sure, there's risk, but it's early days, and there's lots and lots of opportunity. And just to make a quick plug, we're going to explain those opportunities to people and teach them about them in our upcoming big jamboree. It's coming July 15th to 22nd. It's going to be in Vilnius, Lithuania, and we're billing it as the Woodstock of crypto. It's a week of learning and participating, hacking, and building the future inside the Pillar Wallet, which we hope will be one of the major forces for change over the next several decades.
David, we'll need to do a live session with you from Vilnius to find out what's happening here. That would be great to do.
Let's do it. We'll have a recording studio there, so
Perfect. Okay, you heard it here first. And speaking of connections, by the way, someone's asking, do you have a public Telegram?
Oh, there's a bunch of them. I can't even remember the names because I think we switched recently, but just look for Pillar Project. I don't remember. There's 3 or 4 of them. I think ours has about 1,200. You can ask if this is the real one or not. People will tell you. The one with all the trolls and pumpers and dumpers, I don't think that's the real one, but I'm not sure.
Okay, so going back, so we talked about China, talked about the U.S. This person is asking, do you think Russia and Venezuela's proposals to create their own cryptocurrency has any real potential? And is it a good idea from a regulatory perspective?
I think they have no potential. We'll see, but I think Russia's not going to do it. And by the way, we don't need that. There's plenty of cryptocurrencies now. So what we need is for them not to put people in jail for buying them, right? And we could use better tax laws. For example, was it Moldova or not Moldova? What's the other? I can't remember right now, but another state right next to Lithuania, and they said all cryptocurrency transactions are tax-free for the next 5 years. Belarus, someone may have typed that in. Belarus said cryptocurrency and token transactions are tax-free for the next 5 years, I believe, and they may make them free forever. So why don't we all move to Belarus and create our own economy? That sounds pretty good to me. I'm not sure if the winters are so hospitable there. Can you still hear me, Ina?
Yes, I can. Your video froze, though.
I'm back.
There you are.
I don't know if I'll be moving to Belarus, but that sounds enlightened, if you ask me, and I don't expect that to come from Russia. Venezuela is already melted down as an economy, and so a lot of those people are simply using the existing cryptocurrencies we have already, and they're great for that, and that's what I would recommend. If you think about a place like Venezuela, now you probably should price things in Bitcoin and Ether and Dash and Litecoin. You probably should put your prices in those things, because pricing them in the Cruzeiro changes even faster. You probably got to keep adding zeros on top of your prices every day or so. So that's a really good example where you would use Bitcoin as a unit of account and a medium of exchange. But in most cases, we have other money that we would rather get rid of first.
Thank you. And so time's ticking down. We've just got a few minutes left. So for anyone out there who still has questions, send them in now before it's too late. But I will also forward them to David. So any unanswered ones, David, if you don't mind, I might just send those over to you so you can.
We've got a community. Just come to community.pillarproject.io, and people are answering and asking questions all the time. Same in our Telegram channels, all the time. In fact, we've got volunteers who answer the questions. We have volunteers all over the place, and it's really an amazing community. So come join and learn. Perfect.
Great to hear that. This one is asking a decentralization question. Since China is doing most of the money, and could this be a risk in the future?
It's really not. It's really a small number of miners have a huge influence in Bitcoin, that's for sure. I won't say they control Bitcoin. It's not, no one really controls Bitcoin, but it sure is concentrated. And we are in the world of blockchain design looking very hard at how we can design blockchains. We are working on a new blockchain ourselves, and we look very hard at how we can avoid that kind of centralization and kind of natural natural coming, where the economics favor the larger miners. And there are ways to design these. A new generation of blockchains is coming out. I will not be surprised if in 10 years we've left all the existing blockchains behind, or they have to evolve. So it's definitely an issue. And governance of blockchains and cryptocurrencies in general is a huge issue. And we are at governance 1.0, which can't last that long because it isn't that good. We got a long way to go in learning how to govern decentralized systems, not just for cryptocurrencies, not money, but for society. How will we govern decentralized organizations? There's been a lot of work on that. You've heard of the DAO, Decentralized Autonomous Organization. There's much more coming in that area. It's kind of an amazing time in the history of governance, where we have a lot of new, exciting ideas coming on, and we're going to see in the next 3, 4, 5 years some models that will really break the way we think of governance now, and provide new, through experiments, new proven models that will take us forward. And we don't really know what those are right now. I have a bunch of ideas, and I'm going to write about that in my token handbook. I've got a governance chapter that I owe everyone, but you're going to see governance of organizations and of things like cryptocurrencies will change.
Great, thank you. So I think this will be the last question for us now, and it's on a good topic, because David did touch on the fact that blockchain is something that if you are interested in cryptocurrencies, you should read about. We have, again, links to all the blockchain content we have on BrightTALK in the attachment section, including all of the really great ones that David has given for us. This person is asking, is blockchain a real enough threat to traditional financial architecture?
It is. It is. You can, and if you watch my my webinar on blockchain and Ethereum, you'll see that there are 4 things a blockchain can do, and those are the 4 basic building blocks of a bank and of a financial system and an insurance company. So yeah, I've written a lot about this. I write pretty often on medium.com. I give example after example after example how we can disintermediate big organizations and put the power in the hands of the people. It's an amazing time to be in technology, and the decentralized future, even though it will probably be more regulated than I would like, is still an incredible train ride toward, let's say, about the middle of this century, when I think organizations and society and the whole human enterprise will be quite a bit different because of the power of decentralization.
Perfect. Well, thank you so much, David. That's all the time we have for today. Thank you so much to over 500 of you who tuned in live for this second episode of our Ask the Expert series. Again, we run these on a weekly basis. Go ahead and check out the Ask the Expert channel or any of the episodes that are already in the attachment section. Thanks so much again, David, for answering all these questions for us. I know we're going to be running a few more in the upcoming months, but of course we're going to lock down that panel with different speakers who will hopefully persuade the regulators to be better about this. And also a live webinar, you heard it here, David has secured this in Vilnius for the event. So just switching now, David, if you could give a wave to everybody, we'll switch back the slides so they can get see the email address that we're going to have for those who would like to get involved in the series. There's my email address. Do get in touch. And also, please, leave us feedback. There's a box there for you. Give us a rating and some feedback. We'd love to hear about what you want to hear about in some future episodes and how you found this format. So thank you, everyone, again for joining us, and thank you, of course, to our expert, David.
Thanks, Ina.
Bye, everyone.